I just wanna make you mine.
Hey guys, Omar here, broker and CEO of Alden Mortgage and Ome Realty. So this is going to be a debt service covered ratio loan product update 2022. What the hell is a debt service covered ratio? This is for all you investment guys, you BRRRR guys, whoever it is that you guys do investment properties. This is going to be a debt service covered ratio breakdown. So what is a debt service covered ratio? In essence, I'm going to make it very, very simple. A debt service is going to be A, you're going to have your debt, and then B, you're going to have your service. So let's say, for instance, your mortgage, principal, interest, taxes, and insurance is going to be $2,000 a month, and your rent that you are renting to somebody is $2,000 a month. You have what's called a 1-to-1 covered ratio. If you are at $1,250, let's say your principal, tax, and insurance has, let's stick to the $2,000. If it's at $2,000 and your rent total that you're coming in is at $2,500, that means that you have a 1.25 debt to service covered ratio. So this is going to be for investment properties. Let's go down with it. Let's go ahead and give a little brief breakdown because this is going to be super simple. It's going to be super short. I'm going to try to just bang this out really, really quickly. It's going to be for investment properties only because let's just say it's a debt service cover ratio. You're servicing a debt with rent, right? So you're going to go ahead and get a 30-year fixed on this. That's an option that's available. There's interest only ones that we have available too, but this is actually with a wholesaler that I really, really enjoy because they have the lowest rates. So I'm gonna give, this is kind of like the most extreme cases when it comes to being like very, very stringent. But you can go down to 0.75, which if you're an investor, please, by all means, we're gonna have to have a talk. Give me a call, we'll sit down, we'll chit chat. 0.75, do not touch a property that is at 0.75 debt to cover ratio. Anything over a 1-to-1 ratio, don't touch it. But if you do, if that's the world that you're trying to live in, if you know something I don't know, then by all means you go ahead and do it. But like I said, it's investments property only. There is going to be the option of whether you want to do it on a purchase or if you want to go ahead and do a cash out refinance on this as well. So if you already have an investment property and you want to go ahead and use the debt service cover ratio to go ahead and pull out some cash because you did what's called, a rehab, because you recalculate when you purchased the property, you did something that's called an ARV, which is your after repair value, and then you notice that, okay, my after repair value should appraise me for X amount of dollars. I bought the house at $300,000 or the duplex or the triplex or the fourplex, whatever I bought it for, and that is going to be at $400,000. Well, you could go ahead and do your cash out because that's what you BRRRR guys do. You buy, repair, refinance, repeat. That's what you do. The max loan amount on that is going to be $2 million. Is that the highest we could go to? Absolutely not. We could go much, much higher. We could go up to $5 million on these, but for the sake of argument, this is the loan product I like with a very, very preferred, and they have the best pricing. That's the only reason why I'm making this video is because they honestly have the best pricing. If you want to go higher than that, of course, we're going to go ahead and get to different terms on it, and then we're going to have a second appraisal is always going to be required on these properties. So just in case that one appraiser didn't know what he was doing, we always have a second one to go ahead and back up what the other guy said. This is actually kind of a shitty situation because appraisals right now, we're in 2022, and if anybody purchases a home in 2021 or 2020, you know that getting an appraisal out there is just, God bless it, it's so difficult, it's so annoying. But the minimum FICO score on this is going to be 640. I highly suggest you build up that credit score. You build up that credit score because 640 is not that great. You don't want to be at a 640 credit score because it's just not the business, okay? You want to get your credit score at least 700s or higher, but if you are at 640, it is what it is, and you really need to get the property, we got you, we'll take care of it. Max loan to value, this is going to be a 20% down program, so it's going to be 80% loan to value. What is the max cash out that you could possibly do on this? Well, the max cash out on this program with this wholesaler, with these people, are going to be $500,000. $500,000 will be the max that you could go ahead and pull out. Can you pull out more on different wholesalers? I absolutely can. 100% can, but unfortunately they have the best pricing on these DSCR loans, these debt service covered ratio loans. So that's where we're going to go ahead and stand for now, for the sake of this argument. But if you have, for the sake of this video, but if you did have a specific scenario, shoot me a comment, DM me, find me on Instagram. All my information is in the link description below. Let's go ahead and chit chat exactly what we could go ahead and do. This is going to be you could also do a rate and term, which you actually receive $5,000 cash back on a rate and term, which a rate and term just means that your rate and then the term and nothing else. You're not doing a cash out, you're not doing a refinance on anything. It's just gonna, I mean, you are gonna do, you could do a refinance, but it's gonna be on a rate and term, 360 months, and then the term, and then that's it. You could actually get $5,000 credit back on that, cashback credit. What else we'll need is gonna be a 12-month housing history. And you're probably also thinking like, oh my God, you know what? These are one of those like stupid loans that killed everything back in 2008. No, it's not. Because we do have something that's called an HPML qualifier, which means that we cannot go over a certain threshold. So your total fees accumulated with everything, your escrow, your title, everything that we put in as far as originated underwriting fees and everything like that cannot exceed 3%, which is the same as a Fannie Mae product, is the same as a Freddie Mac product, which is the same as any big mortgage-backed security, whoever's it all stays pretty much relatively the same. It's just that we're approving it based off of different parameters rather than your standard W-2s or your 1099s or whatever it is that we're approving you on. So if you like the content, if you want up to 50% commission rebate on your next home purchase or any mortgaging assistance, link in the description below. And might I add, we also do 0% listing fee on selling your current home, if it makes sense. Till next video, guys, please consider liking, subscribing, hit that little bell notification so you can get the next video update. And yeah, till next video, guys, thank you for watching.